Works founder, Charles Lemonidis. Charles, nice to have you here.
Thank you for having me.
All right, you are called Value Works, but I don't think of Rivian as a value stock. Why do you view it that way?
You know, it's important to us to build a diversified portfolio of value stocks, but they're not all the classic value stocks. Rivian's a value stock because you're paying $14 billion for assets that today are worth more than $14 billion.
Okay, explain that to me. That's obviously the current market value of the company, roughly, maybe closer to $15 billion, but down a bit today, so yeah.
Look, they're selling 45,000 cars a year. They're going to be rolling out the new model next year that's going to be doing a couple of 100,000 cars. It's really, really easy to see how they get from a revenue base of $5 billion this year to $15, $20 billion 3 years down the road. And, you know, from a multiple perspective on that, you're paying a big discount, and a bigger discount than any other EV maker out there. And I think they're one of the long-term winners in the automotive space.
You do, yeah. But they have to consume a lot of capital still. I mean, the amount of capital that these companies consume in their early going in terms of getting things started is enormous.
But they're basically done. They basically consume that capital. Look, they have positive gross margins right now. They just took in another $1 billion from Volkswagen yesterday. Volkswagen didn't put that money in there because they don't think this technology is the best going. And they've passed the hurdle of a startup phase business. You know, you're selling 50,000 cars a year. That's not Lucid or Fisker or the other tertiary players. They're going to be one of the two standalone EV makers.
Yeah. Any concerns about the tax credit for people who would buy a Rivian going away?
Not nearly as much as you would have for other EV makers, and the reason is that the Rivians are a $100,000 car, and people paying $100,000 for a car aren't getting those tax credits anyway, because that tax credit phases out when you're at a certain income level.
It's interesting you mentioned the price there. I mean, what about cheaper makers? I know there's big tariffs on the Chinese makers, but even with a 100% tariff, you could save a lot of money and buy a Chinese EV. Globally, will Rivian do well or not?
I would focus on Rivian's opportunity in the U.S., and I would focus on the challenge Chinese makers would have in entering the U.S. market. It's hard to get someone to part with $40,000, $50,000 to buy a car from a brand you don't know, from a Chinese maker that, you know, just opened a dealership up the road. You don't see any Chinese companies in the U.S. market right now, and there's a reason for that.
Yeah, we don't want we don't want them.
Yeah, we don't want them here at all.
But
yeah.
I had a question about electric planes, because you own Joby, and that's been like a monster stock in the last, I don't know, few months, year, up 100%. What's the timeline here for FAA certification?
So the electric vertical takeoff space is super, super interesting, because these products have been being developed for 10, 15 years, and I think they're really, really